Now, with so much going on today, we've got a live version of Investor Renter. And joining us today, all the way from sunny Queensland, Justin, it's a bit wet out there, isn't it? We're going to hear about Queensland in a minute, is RP Data's Tim Lawless. Hello, Tim, how you going?
Well, Anthony, how are you?
And you were just telling us how it's sunny up there.
Mate, we've just had the westerlies blowing all the bad weather away, so it's looking quite nice up here in Queensland.
Well, we got all chilly again. Anyway, the market's not chilly. We seem like we're doing okay. What's your take on it? You've just released your bulletin on the July national results, the quarterly results. What's the upshot of it?
Yeah, well, nationally, I'll start kind of macro. The national figures showed a very brief slowdown in property values. June saw a 1% decline in home values. In July, we actually saw a very slight increase of 0.1%. So in all essence, a flat market at the macro perspective. But when we drill down to Adelaide, it's actually slightly rosier. We have seen consistent growth in the Adelaide market. We haven't really seen any declines in Adelaide property values. And over the quarter, we've seen a 0.2% gain in Adelaide values. So once again, pretty flat, but it looks like Adelaide's escaped from any real decline.
And Tim, what do you say to the doomsayers that tell us that the Australian property market, including South Australia, is 40% overvalued?
Yeah, we hear those comments every now and then. They generally come from only a few people in the market that get quite a bit of airplay, and even some people from the States. And generally we respond to those sort of comments by, they generally say that property values will come back to the long-term mean, keeping in mind that between 1990 and 2000, Australian property values were virtually flat. So most of the growth we've seen in the market's been the last decade. Additionally, when you look at, say, mortgage stress, which is another big indicator, the number of defaults, the number of loans in more than 90 days arrears in Australia is just 0.6%, so it's very low. To put that into perspective, in the States, the rate of defaults is just a little bit over 10%, and for subprime loans, it's nearly up to 20%. So it's still tracking quite comfortably here in terms of mortgage stress and the ability of Australians to pay off their mortgage despite the recent interest rate rises.
So Tim, as far as you can tell, and from what you're seeing statistically, we will have a soft landing or a gentle deflation of the bubble rather than a big crash and burn?
That's the indications we're seeing now, particularly when you look at the Australian economy. We're really seeing the resources sector heating up. The GDP figures out today were certainly very impressive. So Australia's have come back into the growth, economic growth quite strongly, and that will reflect back in employment figures, of course, wages increase and so forth. So we really do think it is going to be a soft landing coming out of a very strong growth cycle.
Tim, very quickly for spring sellers, time on market at the moment?
Well, for Adelaide, we're looking at the average property selling in about 41 days, so quite a reasonable time frame. We haven't seen the selling time blowing out that much at all. It bottomed during the GFC at around about 52 days, 52 to 57 days during the depths of the market. So certainly selling conditions aren't too bad. We are seeing a little bit more power coming back to the buyer though. So for vendors understanding and understanding market conditions, they mightn't be getting the same sort of price they would have last year, but still relatively healthy market conditions.
Thanks very much, Tim. Great to speak to you. Enjoy the weather and we'll catch up in a few weeks.
Always a pleasure. Thanks for having me on the show.
Okay. Now, more property. Let's go to SA's finest and have a look at some gorgeous, gorgeous properties coming up this spring.